You're listening to Puma Podcast.
Hi there. I'm Regina Lay, Senior News Editor of Puma Podcast, and you're listening to Teka Teka News, balitang thinking, hindi breaking. In this episode,
Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that.
lots of jitters in the global financial markets right now, reminiscent of 2008. Are Philippine banks safe? Or, to be blunt about it, is our money safe?
First, all customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today.
By these banks, US President Joe Biden was pertaining to Silicon Valley Bank and Signature Bank, two lenders that collapsed quite suddenly in the past week. Now, you may not have heard of either of them, but SVB is the 16th largest bank in the US. And as its name implies, it caters heavily to startups and other tech companies. Meanwhile, the New York-based Signature Bank is said to be the 30th largest in the United States. The TLDR version of this story is that Silicon Valley Bank made some bad investment decisions. They invested heavily in US government bonds that, while safe, were vulnerable to rising interest rates. Because the Federal Reserve had been aggressively hiking, the value of their portfolio kept shrinking. And then, customers started withdrawing funds, so then they had to sell those bonds at a loss. Fortunately, the US government acted quicker this time.
No losses will be, this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund.
Essentially, that means the government is not saving SVB. As far as they're concerned, this isn't a bailout like what we saw in '08. SVB will stay collapsed, and the US government merely extended a guarantee to cover all the deposits at the bank. The government, through the Federal Deposit Insurance Corporation, or FDIC, has already taken over the troubled banks. And because this isn't a full bailout, investors will lose their money, as with any other kind of bankruptcy.
Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works.
The U.S. Securities and Exchange Commission, as well as the Justice Department, have reportedly already begun investigations into the case. And Biden has promised heads will roll.
And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law.
We're going to pause for a quick break now, but when we return, the big question, should we brace for impact? Stay with us.
The quickest answer there is we should not be worried, because in the first place, the Americans should not be worried because Silicon Valley Bank is not even part of the top 10 banks of America. So that occupies not a sizable part or share in the total asset of the banking sector of America. And therefore, if they should not be worried, more so the Philippines should not be worried about that particular crisis of that bank in America.
That's Ronilo Balbieran, an economist I interviewed on the One News show Agenda. His point being that SVB is not a systemically important bank, not one of those too big to fail ones that were at the center of the subprime mortgage crisis of '08. Both banks had assets of just under $200 billion.
But JP Morgan has more than $3 trillion in assets, so it's not even comparable. So, but what is the problem? The problem is it might actually lead to a panic mode. Perceptions and panic are not a good combination, and therefore it might affect the overall trust of the citizens and the businesses, the startup community on the financial sector. And this could get into the burning of the animal spirit, as we call it in macroeconomics.
But more importantly, local banks have very little exposure to those that failed in the US, if at all. Lenders like BDO, BPI, and Metrobank have already said that they have zero exposure. I mean, other than through the stock market. In the wake of the collapse, banking shares, not just here in the Philippines, but across the world, took a beating, only because investors worried that there could be widespread contagion. But both the Bankers Association of the Philippines, an industry group, and the Bangko Sentral have assured the public that the local financial system is well capitalized and very liquid. Here's economist Ronilo Balbiran once more explaining what that means.
These are backed by deposits by our businesses, by our OFW families. So these are real assets. No? So our banks have not been engaging in risky, adventurous investment activities. So therefore, the total assets of our banking sector is very, very strong, very fundamental, and backed up by real values. So as against other banks in other countries, so they are actually backed by cryptocurrency values, which are subject to very high volatilities.
BSP Governor Felipe Medalla has also pointed out that banks here are mostly invested in our own Philippine dollar bonds and bonds of countries with high credit ratings. And it's true, Philippine banks are known to be quite conservative. That's why it's sometimes so hard to apply for loans. And in fact, Ronilo says, we have the opposite problem here.
The problem is the reverse. No, the problem of our banking sector is they have so much money they don't know who to lend it to, because all the businesses, all the consumers have already borrowed, and we still have more than 3 trillion worth of deposits that are looking for the right borrowers, the right investors who will borrow from our banks. Our problem is actually, how do we actually use the money that we have so much here? No, so how do we actually activate public-private partnership? How do we actually unlock? You were talking about agricultural productivity to help our farmers, our minimum wage earners, to battle inflation. So how do we actually unlock productivity of the agriculture?
That's not to say we won't see any fallout. It's a fast-moving story, and it could still go either way. As we speak, Credit Suisse, Switzerland's second largest bank, is hogging the headlines after it reported quote-unquote material weaknesses in its financials. And bank runs are all emotion, remember. Panic spreads fast, with or without good reason. But if all your money is deposited in reputable Philippine banks, then the answer is yes. Everyone we've spoken to says you can sleep soundly for now. But do keep an eye on things. And that was today's episode of Teka Teka News. Again, I'm Regina Lay. This episode was edited by Pidoy Blanco. If you liked this episode, share it with a friend or two. And don't forget to follow Teka Teka News and Puma Podcast wherever you listen. Thanks for tuning in.